Hello everybody, welcome to the video on basic banking interview questions and answers from CareerRide. So, are you ready to boost your confidence for that upcoming banking interview? Whether you are applying for the position of a personal banker, relationship manager, bank clerk, cashier, sales executive, loan officer, customer service officer at a public or a private bank, having a strong foundation in banking knowledge is imperative. In today's video, we have compiled a list of fundamental banking concepts and common interview questions you are most likely to encounter. These are the things that you'll have to deal with in your day-to-day operations. So, if you're really eager to crack your banking interview, get yourself a notepad and pen because you'll want to jot down these important insights. Don't skip any part of this video, especially if you're committed to excelling at your interview. Ready? Fantastic. Let's get started. Question number 1. What are the different types of banks in India? See, one of the simplest and most asked questions. So, some of the important types of banks in India are number 1, commercial banks. These are the most common types of banks that serve the general public like you and I. Our savings account, current account, FD, loans, investments are the general services they provide to us. For example, your HDFC, ICICI, PNB, SBI, all of these are commercial banks. Then you have your cooperative banks. These are owned and operated by some members and they are specific to a region or community. At third place come the RRBs, that is your regional rural banks. These are small banks set up in rural area to support agriculture and rural development. They are formed by collaboration between central government, state government and sponsor bank. For example, if you see Maharashtra Gramin Bank, which is a RRB, its sponsor is Bank of Maharashtra. Then, as you see in the market, there are branches and subsidiaries of a lot of foreign banks also in India. For example, HSBC, Barclays, all of these are foreign banks. At number 5, you have small finance banks. This category of banks was introduced in the year 2016 in India to serve the underserved and unbanked segments which have very small income. For example, your AU Small Finance Bank, Unity Small Finance Bank, these are all in this category. At number 6, you have payment banks. This is another new category of banks introduced in India in the year 2015. They offer limited services. Pay attention. They offer limited services like savings and remittances. For example, your Airtel Payment Bank, Paytm Payment Bank, what are they? They are payment banks only. Okay. Moving on to question number 2. What is the difference between commercial banks and investment banks? This is another basic question that is usually asked in the interviews. So, the basic difference between these two types of banks is commercial banks primarily offer their services to retail customers and businesses. They accept deposits, remit, and provide various banking products and services to us. On the other hand, investment banks deal with corporate clients primarily, offering them financial advisory, helping them with mergers and acquisitions, IPOs, etc. The regulations they follow are different from those of commercial banks and their risk profile is also higher than that of commercial banks. So, this is the basic difference between these two types of banks. Question number 3. What do you know about NBFCs? So, see, NBFCs, it stands for non-banking financial companies. These are the companies that provide various financial services like loans, asset financing, wealth management, financial services, etc. They are not the members of clearing houses and can't open savings accounts for you. They are regulated by RBI but do not hold a banking license. So, they are different from your regular banks. These are just the non-banking financial companies. Okay, now coming to question number 4. What is the difference between savings account and current account? And what do you know about CASA? See, first of all, savings account is basically used for saving the money and it is designed for individuals. This type of account comes with a checkbook but doesn't provide an overdraft facility. On the other hand, if you see, current account is designed for professionals, businesses and organizations so that they can transact more regularly. The purpose here is not saving, it is managing everyday finances. It comes with a checkbook and many of them provide an overdraft facility also. Now coming to CASA. First of all, CASA refers to a combination of current accounts and savings account in a bank. Banks value CASA highly because these type of accounts provide a stable source of low cost funds to them. These accounts provide liquidity to the bank and letting it lend the money at low interest rates. That is why the banks find CASA very interesting. Question number 5. What's the difference between overdraft and loan? So see, overdraft is like a short-term loan provided by a bank to cover up any temporary cash shortage or unexpected expenses you have in the business. It is usually pre-approved based on your credit worthiness and is to be repaid relatively quickly. On the other hand, loan is an amount borrowed for a specific purpose like home, education, starting a business, etc. The process here goes through formal application, checks, documentation and approval. The repayment in case of loans has to be made in a scheduled time period as per the terms and conditions you have agreed to. Okay, now moving on to question number 6. What do you know about IFSC, NEFT, RTGS and IMPS? Now see, these 4 are the terms that are very frequently used in your transactions. Okay, so let's see them one by one. The first one is IFSC. It stands for Indian Financial System Code. So what is it? It is a 11-character unique code used to identify individual bank branches in India so that you can make your electronic fund transfers. It is imperative for NEFT and RTGS transfers so that the money reaches the intended bank branch. So if you look at your checkbooks, you would find the IFSC code of your bank branch on the top of that. Coming to NEFT, NEFT stands for National Electronic Funds Transfer. It is the payment system that allows electronic transfer of funds between bank branches and can be initiated on any working day during the given hours. RTGS stands for Real-Time Gross Settlement. And as the name suggests, it is real-time settlement of funds used for high-value transactions in India that are time-sensitive also. The focus here is, pay attention, the focus here is high value of the transactions that are time sensitive. Now coming to IMPS. IMPS stands for Immediate Payment Service. It is used for small value transfers that you make every day. This transaction can be done anytime during the day. So when you send money to a friend, pay your bill, you use IMPS. Question number 7. What do you know about NPS? Another important question. NPS stands for National Payment Scheme. It allows the individuals to create retirement corpus for themselves. All Indian residents can invest in NPS, and that includes salaried, self-employed individuals and even NRIs also. The funds are managed by fund managers. The tax benefits that you get under ATC, ATC-CD of income tax make it even more attractive to you. Okay? Question number 8. What is PPF? PPF stands for Public Provident Fund. It is a savings scheme in India that is backed by the government. It helps people build again a retirement corpus for themselves. It also provides tax benefit and a fixed interest rate also. But mind you, NPF and PPF are 2 different schemes. Okay? Pay attention to that. Question number 9. What do you know about SLR, CRR, repo rate and reverse repo rate? See, again, a very important question that confuses a lot of candidates. Pay attention. The first thing is SLR. It stands for Statutory Liquidity Ratio. It is the portion of bank's deposits that it needs to maintain in the form of cash, gold or approved securities. The purpose of SLR is to ensure the liquidity and solvency of the banks. The second term is CRR. It stands for Cash Reserve Ratio. It is the percentage of a bank's total deposits that it must keep as reserves in the form of cash with RBI. Pay attention. In the form of cash with RBI. It is a tool used by RBI to manage liquidity in the financial system. Then comes your repo rate. You must have read about it a lot of times in the newspaper. Pay attention. It is the rate at which RBI lends money to the commercial banks in exchange for government securities. It is a tool that has a direct impact on the cost of borrowing, which in turn impacts the inflation and economic growth. Then comes reverse repo rate. This is the rate at which RBI borrows from the commercial banks for a short term. It is just the opposite of repo rate. When the reverse repo rate is higher, banks get attracted to lend their excess funds to RBI rather than the businesses or individuals. And this action reduces the availability of credit in the economy. So, reverse repo rate is basically a tool used by the RBI to control liquidity in the financial system. Question number 10. What are the different insurance products you are aware of? Now see, as all of you know, there are a lot of insurance products available in the market. For example, some of the general ones that we know of are life insurance, health insurance, auto insurance, property insurance, travel insurance, business insurance, etc. But there are some uncommon ones also, and they are liability insurance, income protection insurance, marine insurance, agriculture insurance, title insurance, pet insurance, legal expenses insurance, etc. Now, before we go further, let me give you a quick trick to find out about the different insurance products in the market. What you can do is you can go to one of these websites that sell insurance policies. For example, maybe you can go to Policy Bazaar and study a bit. You'll have much more information than any other candidate will have in the interview. Question number 11. What is KYC? See, again, this is a term that we hear a lot of times in the system. KYC stands for Know Your Customer. It is a regulatory and due diligence process used by the financial institutions, businesses and organizations to verify the identity of their clients and customers. For this, they collect relevant information about their customers. These measures are important to maintain the integrity of the financial system, preventing financial crimes, and ensuring that the financial institutions and businesses do not get involved in illegal activities unknowingly due to any loopholes in the system. Okay, that is why KYC is done. Moving on to question number 12. What do you know about SEBI? So see, SEBI stands for Securities and Exchange Board of India. It was established in the year 1988 as an autonomous body under the Securities and Exchange Board of India Act 1992. It is a regulatory authority that oversees and regulates the securities and commodities markets in India. So pay attention. It is securities and commodities market that it pays attention to. Okay. This includes your stock exchanges, brokers and other market participants. It primarily works on protecting the investors, regulating the market, promoting fair practices, issuing guidelines, etc. Moving on to question number 13. Tell us something about UPI and Beam. Now see, this question is very important in today's age of digitization. Don't go without preparation to answer this question. So UPI stands for Unified Payments Interface. It is a revolutionary technology that changed the way digital payments worked in India. UPI allows you to link your account from any bank to the devices that have UPI enabled apps. The payments get transferred instantly 24/7 all through the year, as you know. For this, it uses IMPS infrastructure. You remember we just discussed IMPS a while back? So one can transfer money, pay utility bills, book tickets, make online purchases using this powerful technology, and all of us are using it already. Now coming to Beam. Beam stands for Bharat Interface for Money. It is a UPI based mobile app developed by the National Payments Corporation of India, that is NPCI. It is similar in function to your Google Pay or Phone Pay apps. Okay, now coming to another important question in this age of digitization that you can't afford to not go prepared to answer. Okay, the question is, what are payment gateways? So payment gateways are technology solutions that act as a bridge between online merchants, that is your sellers, and the payment networks, that is your banks, card providers, and facilitate online financial transactions. They play a crucial role in the e-commerce process. The biggest responsibility these payments gateways shoulder is secure settlement of payment between two unknown parties. Some of the popular payment gateways that you often witness are Razorpay, BillDesk, BillJunction, etc. Question number 15. Tell us a bit about PMJDY. Now, PMJDY is a term that all of us have heard about. It stands for Pradhan Mantri Jan Dhan Yojana. Its basic purpose is to provide affordable financial services to everybody. It provides basic bank accounts to all with minimal documentation accompanied by a RuPay debit card for electronic transactions. Direct benefit transfers, access to your pension schemes, insurance coverage are also provided through this Yojana. Okay, and now coming to the final question for today's video. What do you know about Banking Ombudsman? So see, Banking Ombudsman is a quasi-judicial authority that RBI has created. Its purpose is to resolve customer complaints regarding banking services provided by these commercial banks and other certain financial institutions to their customers. If a customer is not satisfied by the Banking Ombudsman decision, he can still appeal to the appellate authority. And who is that appellate authority? It is the Deputy Governor of the RBI. The service is provided free of cost, and its aim is to provide quick and efficient resolution to the grievances customers have against their banks. It ensures that the banks provide a good and honest service by sticking to the standards that have been set up by the RBI. So friends, if you're going to face an interview at a bank, don't go without preparing these basic questions because they'll definitely be asked. Very soon, I'll get you a video on some important personal interview questions also that are asked while interviewing for these positions at banks. To get that video, make sure that you are subscribed to the channel. If you have found today's video useful, do give it a thumbs up and share it with your friends also. I'll see you very soon with a new one. Till then, bye-bye and take care.